The Fed just pulled the trigger. Again, another rate cut. And just like that, Bitcoin dips to 108K?
Okay, Fox News alert. We've got that key interest rate decision. It is out now. The Federal Reserve cutting interest rates by 25 basis points. That's a quarter point. And the markets have been rallying into this decision. The Dow up 150 points right now at another record high, although there's a bit of sell-off happening on the news, as does sometimes happen. Welcome to another hour of America.
You can hear the panic echoing across the timeline. Dudes who were bulls turned to bears and started dancing around like Buffalo Bill. But listen, not for Bitcoin. The full faith and credit of the United States is cracking. Jerome Powell even knows we're on an unsustainable path. This isn't about 25 basis points. This is about the end of an era and the beginning of the next. Because while Powell's printing confetti, Michael Saylor's calling for 150K Bitcoin by the end of the year. Hell yeah, baby. Sunday.
Well, I think Bitcoin's going to continue to grind up. I think the volatility is coming off of it as the industry becomes more structured with more derivatives and more ways to hedge it. Our expectation right now is end of the year, it should be about $150,000. And that's the consensus of the equity analysts that cover our company and the Bitcoin industry right now. I don't know why it won't grind up to $1 million a coin over the next 4 to 8 years. I would think not less than 4, not more than 8. And of course, my long-term forecast is it goes up about 30% a year for the next 20 years, and we're headed toward $20 million Bitcoin.
Michael, thank you so much.
Yeah, my pleasure.
Let's start with the rate cut heard round the world. The Fed just made its second rate cut of 2025, officially ending QT on December 1st. That means no more balance sheet reduction. Translation, QE5 just snuck in the back door wearing a fake mustache. Oh, and what's this? Powell said they'll start adding reserves.
So you're right. The place we'll be on December 1 is that the size of the balance sheet is frozen. And as mortgage-backed securities mature, we'll reinvest those in Treasury bills, which will foster both a more Treasury balance sheet and also a shorter duration. So that's what, in the meantime, if you freeze the size of the balance sheet, the non-reserve liabilities, currency, for example, they're going to continue to grow organically. And because the size of the balance sheet is frozen, you have further shrinkage in reserves. And reserves is the thing that we're managing that has to be ample. So that'll happen for a time, but not a tremendously long time. We don't know exactly how long. But at a certain point, you'll want to start reserves to start gradually growing to keep up with the size of the banking system and the size of the economy. So we'll be adding reserves at a certain point, and that's the last point. Even then, we didn't make decisions about this today, but we did talk today about the composition of the balance sheet, and there's a desire that the balance sheet be right now it's got a lot more duration than the outstanding universe of Treasury securities, and we want to move to a place where we're closer to that duration. That'll take some time. We haven't made a decision about the ultimate endpoint, but we all agree that we want to move more in the direction of a balance sheet that more closely reflects the outstanding treasuries, and that means a shorter duration balance sheet. Now, this is something that's going to take a long time and move very, very gradually. I don't think you'll notice it in market conditions, but that's the direction of things.
What the hell is he talking about? But anyway, that's probably Fed speak for we're out of ammo, so let's print some more. Now, Powell's pretending this isn't QE, but come on, the Fed's been quietly reinvesting treasuries into new bills. That's liquidity injection 101. And what happens when liquidity floods the system? Stocks fake a recovery, the rich get richer, and Bitcoin gets jet fuel. So why the dip? Well, because people are confusing short-term price action with long-term conviction. Every empire hits this phase. When the currency starts dying, the rulers start lying. Cut rates, pause QT, spin the narrative, rinse and repeat. The truth is, the pivot is here. The Fed can't walk it back now. Even though Jerome said this. Now, this is a longer clip from his speech yesterday, but pay attention and we'll talk about what was said that everyone is missing right after it, and why Jerome's statement isn't as hawkish as it appears to be. Here we go.
So, Mr. Chairman, I want to take another crack at the further reduction of rates is not a foregone conclusion. So in December, he said, far from it. So if a cut might not be on the table for December because of lack of data, what does the other concerns then stem from? So if it's not lack of data as the reason December is not a foregone conclusion, what other things could be the concern then? Well,
the perspectives of people on the committee that, we've now moved 150 basis points and that we're down into, you're into that range between 3 and 4 where many estimates of the neutral rate live in that 3 to 4% area. You're there now. You're above the median number for the committee, but I think there are people on the committee who have higher estimates of the neutral rate, and that's you can argue these positions since it can't be directly observed, the neutral rate. So, I think for some part of the committee, it's time to maybe take a step back and see whether there really are downside risks to the labor market, or see whether in fact the growth that the stronger growth that we're seeing is real. Ordinarily, the labor market is a better indicator of the momentum of the economy than the spending data. That's the lore. In this case, that gives a more downbeat read. So people just have, again, we've cut 50 more basis points in the last 2 meetings, and there's a sense like, let's pause here, kind of thing, and a sense from others wanting to go ahead. But that's why I say differing views, strongly differing views.
So on that division, then, you're talking about going forward. So what's more important in this division? Is it inflation risks? Is it employment risk? Or is there a deeper philosophy division among the board?
Look, everybody on the committee is deeply committed to doing the right thing to achieve our goals, maximum employment and stable prices. You have differences on how to do that. And as I mentioned, some of that is different forecasts, but a lot of it is also different risk aversions to the different variables, which is common through all Federal Reserves. People just have different risk tolerances, let's say. So that leads you to people with disparate views. You will know that from the speeches you've been listening to from my colleagues. And so we're at a place now where we have, in fact, cut 2 more times. And, we're 150 basis points closer to neutral, wherever that may be, than we were a year ago. And so there's a growing chorus now of feeling like maybe this is where we should at least wait a cycle, something like that. That's what it is. It's just what you think it would be. It's and again, you've seen it in the September Summer of Economic Projections. You've seen this in the public remarks of FOMC participants, and now I'm telling you that's what you can expect that in the minutes. And I'm just telling you that's what happened in the meeting.
Elizabeth. Thank you so much. Elizabeth Schulze with ABC News. What is your explanation for why the job market is weakening right now, and what will this rate cut do to improve the job market?
So I think there are 2 things affecting the job market, and one of them is just a dramatic reduction in the supply of new workers. And that's 2 things. That's declining labor force participation, which is a cyclical thing, and then there's declining immigration, which is just a big policy change that actually began in the last administration and has been accelerated now. So a big part of the whole story is that supply side story. Okay. In addition, labor demand has declined, and so the unemployment rate has gone down, meaning that demand for workers has gone down a little more than supply. So that's what's going on, but it is mostly a supply function. It's mostly a function of the change in supply, I think, and many people think. So the question then is, what does the our tool do, which supports demand, and and I would just say when you're in a situation where job creation, if you adjust for likely overcounting in the way that BLS does its work, is pretty close to 0. So maximum employment doesn't, on a sustainable basis, if you're creating 0 jobs, if it's in equilibrium, if it's in balance, it's a pretty as I said before, a pretty curious balance. So, I thought, and many of my colleagues thought, in fact, you've seen the last two meetings, that it was appropriate for us to react by supporting demand with our rates. And we've done that. We've reduced so that rates are looser. I wouldn't say that they're accommodative right now, but they're meaningfully less tight than they were. And that should help so that at least the labor market doesn't get worse. Though it's a complicated situation, and some people argue that this is supply and we really can't affect it much with our tools, but others argue, as I do, that there is an effect from demand and that we should use our tools to support the labor market when we see this happening.
Powell didn't just cut rates. He played politics live on stage. He basically told Congress, reopen the government or no December cut for you. No soup. It wasn't policy guidance. It was a hostage negotiation. Markets freaked out. Treasury yields spiked. Bitcoin dipped and everyone screamed, hawkish. But here's the inside baseball. This was not a hawkish move. It was leverage. This was conditionality. Powell saying, give me data. Reopen DC and I'll have cover to print again. You can't call this tightening when the Fed's already declared an end to QT. That's like saying you're on a diet while ordering dessert before the meal. Complete hattery. So the headlines read, no guarantee of a December cut, but what really happened? Powell just greenlit the next liquidity flood right as his own term expires in 6 months. Says you're gone, and Powell's about to be the fall guy for 50 years of Keynesian clown math. Every empire dies the same way. Military overreach, reckless spending, currency debasement, inflation, lost trust, until collapse. Rome did it. Weimar did it. Even Powell knows. We are on an unsustainable fiscal path.
How do you assess the national debt?
We mostly try very hard not to comment on fiscal policy and instruct Congress on how to do their job when actually they have oversight over us.
But is the national debt a danger to the economy, in your view?
In the long run, the U.S. is on an unsustainable fiscal path. The U.S. federal government's on an unsustainable fiscal path, and that just means that the debt is growing faster than the economy.
I have the sense this worries you very much.
Over the long run, of course it does. We're borrowing from future generations. It's time for us to get back to putting a priority on fiscal sustainability.
Meanwhile, Treasury Secretary Scott Bessent just announced a radical plan. Cut federal jobs, re-privatize the economy, and turbocharge manufacturing. Something about re-leveraging the banking system. Translation, we broke it, and now we're pretending that we can fix it.
We are, under your direction, we're re-privatizing the economy. We're bringing down government spending. We're bringing down excess employment in the government sector. On the other side, we're going to re-leverage the banking system. We're going to have all the new manufacturing jobs, so everyone who's laid off from the government will have an opportunity to go into the private sector, and that is going to lead to disinflation. Inflation is under control. We're going to get the affordability crisis fixed. So lower energy, deregulation, more private sector jobs that will naturally get interest rates down. Mortgage rates are down almost every week since January 20th. The energy costs are down about 15%. Crude oil's down about 15%. And as we keep that going, interest rates are going to keep declining. It'll be good for mortgages. It'll be good for credit card debt. It'll be great for auto loans.
While the Fed fiddles, the geopolitical stage is catching fire. Trump just met with Xi. Historic deals, lowered tariffs, fentanyl crackdown, rare earths, free flow, Alaska oil buys. It's the art of the deal. Meets Dr. Strangelove because on the same day, Russia tested its Poseidon nuke torpedo. And Trump ordered U.S. nuclear testing for the first time since 1992. Yeah, the fiat world's cracking. And now the nukes are back. The National Guard's training quick reaction forces for domestic unrest. This is fourth turning chaos in real time. And when the fourth turning strikes, it's time to secure your generational wealth. And if 150K didn't give you an Omega candle, how's a $10 million Michael Saylor happy ending sound? We're about to bring it home. But first, Look at our likes.
3-4 times, maybe.
Gotta pump those numbers up. Those are rookie numbers in this racket.
Let's take a quick second for our sponsors who keep this show on the air over at the Bitcoin Way. If your wealth lives in their system, it's not yours, it's theirs. That's why we scream Bitcoin. That's why you self-custody. And that's why you call our friends over at the Bitcoin Way. They'll walk you through multi-sig, self-custody, privacy, how to run a node, and the tools that keep you sovereign when the fiat system pulls the plug. Don't wait till it's too late. Book a free 30-minute consult today using that link in the show notes. Need cash but don't want to sell your Bitcoin? Ledn is the global leader in Bitcoin-backed loans, issuing over $9 billion in loans since 2018, and they were the first to offer proof of reserves. With Ledn, you get custody loans, no credit checks, no monthly payments, and more. Visit learn.ledn.io/simply to learn more and get 25 basis points off your first loan. So what do when your leaders are losing their minds and your money's losing its value? You exit into Bitcoin.
Exactly, Eleanor. And honestly, we're also, we talk about this a lot, but we filed for Bitcoin index options to complement our NASDAQ 100 options program. We have an unbelievable NDX, what we call the NASDAQ 100, obviously, and we have index options on them where we've grown substantially in the last 3 to 4 years. We're now averaging over 110,000 contracts a day, which 2 years ago was in the 40s. So a lot of growth. And we expect that same thing to happen with Bitcoin index options at NASDAQ.
NASDAQ says demand for Bitcoin is about to explode. These are the same institutions that called it a joke 10 years ago. And Michael Saylor said Bitcoin will hit a humble 150K by the end of the year, but that's just the pit stop on the way to Valhalla. Because he also says...
So we're winning, but I guess the good news for everybody is we're going to keep winning for the next 10 years, and there's 40 quarters during which Vanguard will first accidentally own my stock, then they will grudgingly let you buy it, then they will allocate 1% to it, and then they'll be like, wow, I guess it's a good idea. And what I say, and I've said it, Scott, and you've heard it, it's like, by the time the bankers tell you it's okay to buy it, it'll cost you $1 million of Bitcoin. And when they tell you it's a good idea, it'll cost $10 million of Bitcoin. So you're getting a 99% discount right now to do the work yourself and show some courage. And you get a 90% discount, when they make it easy for you, but you'll pay 10 times more.
And the math doesn't lie. The Fed ends QT, liquidity rises, real yields fall, Bitcoin rips. It's not faith. It's physics. Even the Strive CEO said it on Bloomberg. Bitcoin is the only answer to the debt crisis. Because when the debt's unpayable and the money's unbacked, the only thing left is to opt out.
It actually was the reason I became a Bitcoiner in the first place. I was managing a large portfolio of U.S. Treasuries. I was probably one of the largest buyers of U.S. Treasuries in the United States. And talking directly to the Fed, to the Treasury, it gave me conviction as a once Bitcoin skeptic that Bitcoin was the only answer to the debt crisis and the fiat currency debasement. And the fiat currency debasement as an investment opportunity is kind of becoming popular in Wall Street circles now. But for Bitcoiners, this was a core part of the thesis, and obviously the other being true financial freedom and an opt-out from a system. But the debasement trade, Bitcoin's the only answer. And I think that a lot of Bitcoiners, including myself and Strive, have conviction that the U.S. government's never going to stop printing money. The debt crisis is a bipartisan issue. And, as an American, I'd love to see it be solved, but I am not optimistic on it being solved. And I think that only provides more and more tailwinds for Bitcoin and people that invest in Bitcoin.
2025 isn't 2008. It's 1929 with memes. We're watching the system unravel in high definition. And just like every empire before it, the collapses start in the balance sheet and then end in the streets. They can print dollars, but they can't print trust. And trust? That's kind of like Bitcoin's monopoly at this point. Powell's still talking about soft landings. Sorry, brother, but the only thing landing soft is his job. Next spring, as the fourth turning flood rolls in, the question is simple. Do you cling to the wreckage or do you build an ark? Because Bitcoin is the ark. It's monetary Noah's ship built one sat at a time. So here's the takeaway. The Fed just confirmed what we already knew. They can't save the dollar without destroying it. Saylor's calling for 150K by year's end, but we all know that's just the warm-up. The next leg isn't about price, it's about exit velocity. The banks, the governments, the empires. All of it runs on borrowed time, literally. from our futures. So stack sats, stay humble, and get those tickets to Mining Disrupt 2025. Get those tickets to Mining Disrupt 2025. See the future of Bitcoin mining up close in Dallas, Texas, November 11th through the 13th. The biggest names in the industry. Cutting edge rigs, Bitcoin, and AI integration, the signal you won't get anywhere else. Grab your tickets today and use promo code SimplyBitcoin for 20% off, and we'll see you there. Hey, hope you guys enjoyed this one. Don't forget to subscribe and give us a pamp by sharing the Sound Money Gospel. Set those notifications for the best in Bitcoin news delivered to you daily. And I'll catch you all next time. Love you guys. Peace.
If you prefer to go down with the ship, you.